Hello traders, my name is Logan with Funding Talent. Today, March 8th, we're going to be doing our weekly market forecast for you guys. In this video, we hope to highlight the overarching fundamental drivers for this week and the best technical setups so you know where to look to identify your trades for this upcoming week. So without any further delay, let's get right into the charts. So before we go into the technical setups for the week, we are going to dive straight into the high impact news that is going to be evident in this upcoming week so we can know what to keep our eyes on. There is high impact red folder news pretty much the entire week, with the majority of that falling on Wednesday. But all of these times are in EST, so please convert it to your time zone when looking and being careful. So at 5 a.m. we do have British pound news when Bank of England Governor Bailey will speak. At 5 p.m. on Tuesday we have an Australian dollar news when the Royal Bank of Australia Governor will speak. And then on Wednesday we have USD news at 8:30, Canadian dollar news at 10 a.m., and tentative Canadian dollar news of the Bank of Canada press conference for the entire day. At 7:45 a.m. EST on Thursday, we have Euro news, and then again at 8:30 a.m. we also have Euro news. And then Friday, we have Canadian dollar news at 8:30 a.m., which is the unemployment rate and the employment change. Well, I think after this week, we can see that our risk-off market sentiment that we identified last week was indeed correct. And it was very evident in the markets. The SPX, which is the same thing as the S&P 500, is down close to 2% this week. With the increased volatility, at one point it was up to 2%, and it was then down 3%, but is now closing the week at around 2%. The U.S. trade deficit widened to the third biggest on record in January as imports surged to the highest since mid-2019. The gap in trade of goods and services expanded to $68.2 billion in January from $67 billion in December. This is according to the Commerce Department, which was released on Friday. This compares with the median estimate for a shortfall of $67.5 billion in a Bloomberg survey. Total imports increased 1.2% to $260.2 billion, the most since August of 2019. Outward bound shipments of goods climbed 1% to $191.9 billion, but still remains below pre-COVID pandemic levels. So what this seems to really mean, in simple terms, is that global trade seems to be picking up, but with that comes large increases in the trade deficit. So, for our risk sentiment this week, we're going to be looking at a risk-off market sentiment. There is some mixed news, so you have to be careful. This mixed news is good job numbers and international trade increasing, but both our technical and fundamental setups are aligning with a risk-off market sentiment. So that's why I am confident in this next week we will be having a risk-off market environment, and therefore we will see expectations lower for further economic growth, which means the Japanese yen, Swiss franc, the US dollar, and certain commodities can be expected to appreciate. Now, for our vaccine weekly updates, we do have a steady increase finally in the administration and delivery of our COVID vaccines. These are US numbers only. But we have 109.9 million delivered, which is an 18.2 million change from last week. And we have an 82.6 million administered, which is a 14.3 million change from last week as well. So we were seeing uneven numbers in the increases, and it was kind of slowing down in the administration news. But recently we have picked up our administration numbers, which means we are keeping up with the delivery numbers, which is great. That means steady increases in vaccines. Vaccines are continuing to be getting rolled out at a steady, constant pace. So, as always, we're going to be starting our weekly technical analysis on the DXY 4-hour chart. As you can see, we identified this downtrending channel for you guys last week. We broke out, and as you can see, we were forming our C wave. We finished our A wave and our B wave in this downtrending channel, and then we broke out to go finish our C wave and completion of this corrective wave. If you're not an Elliotician and you don't know what that means, essentially, the market moves in impulse and corrective waves. It's the ebbs and flows of the market inherently. The labels that we use, the 1, 2, 3, 4, 5, the ABC, and the WXY, are just labels. They're just helping us to identify which wave we're currently in, so then we can identify where our next trend will start. So, after an impulse, we have our corrective. This right here is a completion of our corrective waves. And then, after the corrective waves are done, you see an impulsive move, which identifies the next direction of trend. So, right now, I'm going to say I'm kind of indecisive on this because we just finished our corrective wave and we need to see where our next breakout is in order to determine our trend. Moving on to BTCUSD, as you can see, we did also just complete this corrective wave and we broke out of this resistance line right here on the 28th of February. I am long biased on BTC for the medium to long term, but overall I do think that we are extended. That being said, my next price target is 68,000 if we continue to hold this bullish trend. If we happen to invalidate this bullish trend that we've identified with this corrective waves and the completion of our 5 waves higher right here, then we can begin to look at short opportunity. That might not happen, and even if it does happen, we're going to then adjust our bias. Right now, I am biased, Bitcoin will be going long. Moving on to our S&P 500 chart. This is the same chart that I was discussing with you guys on our risk sentiment for this upcoming week. We identified this whole setup pretty much around this level on the 16th of February. Since then, we have seen prices come down, break out of this uptrending wedge, and continue to confirm this pattern. My first price target will be 3,637. At that point, I will reanalyze and see if we're going to head down farther. But until then, that's going to be my medium-term price target. I am short biased on the S&P 500 chart, but this happens to be one of those situations. I hope my analysis does not work out, because if this does work out and we do break that 3,637 level, it is possible, possibly not likely, don't know right now, I don't have the statistics for you guys, but it is possible that we get headed into a medium to long-term financial downturn. Moving on to our silver chart, I actually identified this for you guys today, and I thought it was pretty interesting, so I wanted to share it. We finished our 5 waves up, and this was when the whole silver squeeze thing happened, which I don't really think was a silver squeeze, but that can be done in a later video. Since that silver squeeze 5-wave impulse happened, we did form our A, B, and C waves. We are coming down and looking to complete our C wave now, so I am short biased on silver. As you can see, you can draw this right here. We recently broke out. Maybe we're going to get a retest and come back down. C waves have 3 intermediary waves, so possibly this is the first wave, second wave, and third wave, or potentially this is one wave, and then we have a retracement, retest, and then come back down to finish our C wave. For the medium term, I am bearish on silver. There's also a divergence on the 4-hour and the daily chart. So we identified XAUUSD, which is a gold chart for you guys a little while ago, but I think this is a great opportunity to be buying into gold. As you can see, we're having a retest of this downtrending channel, which is also lining up with the 61.8 retracement of our last wave, and we are divergent on the daily and weekly charts. So my first price target will be 2,080, which was our previous high, and then we can readjust our price targets after we reach that level to find our extended price targets. Moving on to NZDCAD, this is also a daily chart. Around this level, we identified this as a head and shoulders for you guys, which we had to wait for the confirmation, which would be the break of the neckline, which we never got, and we actually were invalidated on this head and shoulders. Since that happened, we came up and retested that weekly resistance fractal, and we were divergent on the 4-hour and daily charts at that level. So as you can see, we came down and broke the support line. So for the medium term, I'm also short on NZDCAD, which does line up with our risk off market sentiment. Personally, I think there's a fantastic opportunity to be selling AUDJPY. This is a 4-hour chart, and we did just complete our 5-wave up, which was the end right here. We finished our A wave and our B wave, and we're coming down to finish the C wave, potentially of our first A wave, which is a higher term time frame, A wave, which would then turn into a B wave, C wave, and then a bearish reversal of trend, which would take prices lower. So you can either wait until we break the support line, or you can be looking for intermediary, medium-term selling opportunities on AUDJPY. This also does coincide with AUDCHF. As you can see here, we finished our 5 impulse wave, which then was followed by A wave and a B wave, and as I said previously, we have 3 waves in our B wave. As you can see now, I think we just finished our first wave. We're coming up to finish our second wave, and then a further push down to finish the C wave, which means I am also bearish on AUDCHF, and both of these pairs do line up with our risk off market sentiment as well. So here we are on GBPNZD. This is a 4-hour chart, and you could probably be saying, Logan, isn't this a inverse head and shoulders? Why are you looking to go short? It's not an inverse head and shoulders, and I'll tell you why right now. It's possibly a Libra pattern, but the reason it's not a head and shoulders is because inverse head and shoulders in general are reversal patterns. As you can see here, this is a continuation pattern, so that's why it cannot be valid as a head and shoulders. I am medium to long-term bearish on GBP pairs, which also does line up with our risk-off market sentiment, but I'll stop saying that because I've said that 5 times in the last minute. As you can see here, we are divergent on the 4-hour and the daily charts, coming up and retesting this as a double top. My last confirmation for this trade will be if we break the support line. That will be my entry, and I will be taking price at least down to this 1.899 level. Moving on to GBPCHF, it's pretty much the same bias, but this one is definitely possible to be invalidated if we invalidate this double top. That does not mean that this will not come lower, but it might mean that we have short-term movements to the upside. The reason that I'm still going to be bearish on this is because we are maintaining pretty heavy divergence on the 4-hour. Here we are on USDCAD, and we identified this for you guys around here at this bottom of the second wave, which was the bottom of this resistance fractal. As you can see, we've then since broken out of that channel, formed a shorter time frame channel, lower time frame channel, broke out of that, and we're steadily moving up. I do think that this will be the first wave of the third, and we will continue to see prices increase on USDCAD, which does line up with our currency basket analysis, and what am I about to say? The risk-off market sentiment. So, in the medium to long term, I am bullish on US. So for our currency basket strength and weakness analysis, I see the Japanese yen appreciating, the euro, pound, Kiwi, and Australian dollar depreciating, with some indecision in the USD, which I showed you guys on that DXY chart, because we've not identified the next trend, so we don't really have a clear direction. Swiss franc, we've finishing a double bottom, so I'm not entirely sure. Swiss franc, we're finishing a double top, so I'm not entirely sure if we're going to break through and continue that momentum higher, or if we're going to come lower. Same with Canadian dollar. We're extremely overextended, hyperextended, if you will, on the 4-hour and daily time frames, which makes me think that we could see a top form in the Canadian dollar in the near future. We are also divergent, which does also help with that analysis, and we are approaching some major critical areas where we can see price reversing. So traders, that was our market forecast for this week of March 8th. We hope that you've taken some valuable insights out of this video, so you know the fundamental drivers for this week, so you know what times to be careful, and also the best technical setups so you can go prepared into this upcoming week. If you are not already following us on all of our social media platforms, be sure to do so because we're releasing new content every single day, and every single Monday we're going to be releasing market forecasts just like this one on our YouTube channel. So, on behalf of everyone at Funding Talent, as always, happy trading.